Good afternoon. Welcome to GrainTV. It's September 4th, 2014. I'm Logan Burgess. To my right here is Cody Bills to help break down another negative day for the grains in Chicago. Take a look at the iPad here. A lot of red on the board. We had corn down 5.5 cents. Beans leading to the downside off 16 3/4. We had Chicago wheat moving lower as well, down 5.5 cents. We did have a good export sale to start off the trade session today. 120,000 tons going to unknown destinations for 2014-15 corn. That did very little, though, to stop the selling. Cody, looking at this market here, what was driving things lower in Chicago?
Well, first of all, I think there's three things that are driving this market lower, kind of creating a bit of a perfect storm to kind of beat down grains in the last couple days. First of all, we have an increased production expectations out of the September 11th WASDE report. We saw that reflected in FC Stone's increase in yield estimates, going from 172 to 174. I don't necessarily think the USDA is going to come out with those sort of lofty yield projections, but it does show that the market is expecting higher yields in this report. We have seen an increase in crop production, good to excellent ratings, and when you look at soybeans here, it's the best ratings that we've actually seen for this time in the crop year. So very positive when you look at production. I would expect the USDA to lift their production numbers here, their yield estimates from the August report. Now, the other thing here that's really kind of beating on grains is the fact that we continue to have a sharp rallying U.S. dollar. That U.S. dollar rallying is putting a lot of pressure on commodities as a whole and will likely influence the grains here as they struggle to maintain competitiveness on the global market. Finally, we broke through some key support levels, and when we break through that, you can only imagine that you get some stops and some people jumping on that momentum. One of the reasons why I think we saw a follow through today.
Yeah, Cody, that's kind of apparent here when you're looking at the daily chart of the December corn contract. You can see here on the left is that daily chart, the right is the monthly chart, and really for the last couple weeks here, we've been looking like we're pounding out a bottom here for corn. As you said, with yesterday's move, though, the bottom fell out, and we saw some follow through today. Today we went down and tested 343, which was a low that we saw back in June 2010. So it's going to be interesting to see if this area can hold. A lot of analysts out there right now looking for this corn market to make a move toward 3, even hearing some people talk 280 or so before a firm bottom is found. And in large part, that's driven by production estimates and carry out here for 2014-15. Looking at corn, kind of different though looking at beans.
Absolutely. When you look at beans here, you'll notice that it's a very different story. We've seen relative weakness. Just look at the daily chart. We weren't pounding out a bottom. We've really been finding new bottoms here over the course of the last couple months. So we've seen relative weakness out of soybeans, and it's likely that that will continue. Now today we went down to $10, or we tried to make a run at $10. We found support at $10.01. We traded a little above that, finishing on the day about $10.03 here. I wouldn't be surprised if we retest $10 in the days to come. There's a good chance we'll fall through it. When you look at the monthly chart over here on the right, you'll notice that we may not see significant support when you look at the chart and when you look at historical price action here until around $9, and then if through that, even $8. So I think what we want to pay attention to is that it's likely that we continue to see relative weakness out of soybeans as it has a little bit more of a gap here, a little bit more of a free chart landscape for us to fall before we get to those key support levels that held in the past.
Yeah, let's take a look here quickly at wheat. Kind of a similar situation to corn. You can see that on the daily chart here of the December wheat contract. We were kind of trading sideways, fell out of bed here in the last couple sessions. Today we went down, tested 542, or actually broke through 542. Kind of the next stopping point for wheat could be $5, that whole price level, but really not seeing firm support now until 472, which was also a low from June 2010, kind of similar to corn there. So I think right now, with all this in mind here, the big takeaway is that it's been a painful decline here for U.S. grain prices really since the August report. But when you look at the fundamentals, when you look at carry-out expectations, when you look at the technical landscape, there's definitely still downside. And when we're coming into a report like the September USDA WASDE report, it could be a good time to get some protection in place. We have a lot of farmers right now that have been very well protected during this, but certainly still getting calls from people that are undersold. And if you're in that situation, feel free to call our office. Number is 877-472-4607. Wrapping up the show here, Cody, what do we see out of ethanol today? Once again, pretty strong number there. not really doing much for the corn market, though.
Yeah, absolutely. It was a decent number here. We're now, in terms of production, up to 921,000 barrels per day. When you look at stocks here, we did see an increase in stocks. So increase in production, increase in stocks, kind of canceling each other out. Nothing terribly bullish here. But when you look at export sales, we're going to be paying close attention to wheat, because wheat is one of those things we've been really losing competitiveness on the global market. The dollar's been rallying. Wheat is going to take the brunt of that. It's going to be very difficult. I know that we saw Egypt's gas issue tenders. We didn't win any of those sales here. So we're paying close attention to export sales. We'll be getting those out tomorrow here because of the Labor Day holiday. It's been pushed back to Friday. Expectations here for wheat between 250 and 450,000 metric tons. Corn, keep in mind this is the last of the old crop export sales here, so we'll see how we finish off the year, and then we'll look at what's to come here on the new crop. We have corn expectation between 500 and 750,000
Absolutely.
metric tons.
That export sales report will be out at 7:30 Central Time. We'll be tweeting about it as it comes out over on Twitter at GrainTV is where you can find us there. As Cody said, as we've been talking about a lot here, we do have a big USDA report coming out next week, September 11th. If you want live quotes for that report, visit us over at grainhedge.com. We have a number of great trading platforms. We have a number of great clearing members that we work with, and we have very competitive rates as well compared to a lot of other brokerages out there. If you're not quite content with where you're currently at and want to take us for a test drive before that report, like I said, visit us at grainhedge.com or call the office 877-472-4607. Thanks for tuning in. We'll see you tomorrow.